Hello, Warriors. I want to start off by looking at the US dollar yen, which last week sold off from a little over the 112 area. If you've been following my videos for some time, let me just put up the weekly here and you'll see what I was looking for. I was looking for a test above it up here against this line. This would qualify for a third drive, but the fact that we're up this week means that we could still get a push up here. And besides looking for shorts in the yen up there, it could create very nice buying opportunities in gold and silver. So, you know, they move inversely to each other. When US dollar yen is up, which means actually a weaker yen, the metals usually sell off and yields usually go up. So everything, that correlation's working across the board today. US dollar yen up, yields up, gold down. So I'm looking at gold and I'd like to be able to buy it maybe around this 1738 level, 1734, but I'm going to use the yen as a key. So I want to see if we're either going to have some type of retracement here off this break. I'm just drawing some fibs and see what that would look like, but something like this, although I'm only getting 78.6, 1180. So I'm looking at potential retraces or a marginal new high up towards this 3 drive line up here. And I'll key the yen off of when I believe the yen has peaked. I'll be looking at not only shorting the yen, but looking at long opportunities in precious metals. Now, between the two, they're both down about the same percentage today. But when I look at the charts, it's a little bit of a shift that we have happening here, is that when you look at the gold, I think we're starting to get some type of shoulder here, but look at silver really only moving sideways. So silver appears to be holding up a little better. It'd really be nice to see a break back into this $22 level. That's about 45 cents, 22.10, right around there. You see all the support here. I'll just draw horizontal line there so I don't forget it. But I have this one at 2183, but this 2210 level would be another nice area. Those two areas for looking to buy silver, and hoping the yen cooperates for a retest of 112, or it's too early for me to say on basically the second day up if we're going to have enough to make new highs. But I'm not ready to short the yen here, and I'm not ready to buy the metals here. So there again is that word patience. So I'm not going to be afraid of missing it. If you are, what you can do, if you just have to have a position on all the time, is, say for example, you trade 100-ounce gold contracts at a time. So you put your toe in the water with a piece in case it isn't as deep, or in case the yen doesn't make a new high. My style is just to wait and see what happens here, if we're going to have a retrace or a new high, but I think it's the key. And with that going on, on this pullback in the dollar, we did not even get to 93.5. I actually think that's more bullish if we don't give people a chance that didn't buy this breakout a chance to buy it back there a week or so earlier. We start closing back over this 94.02. We could move to above new highs. If you see these highs right here, they're pretty strong readings. And what do I teach about RSI? Not just the divergences, but confirmed highs. This looks, we had a little divergence between this peak and this peak, but let this be instructional that when you have divergences over 70, they're not ideal. I need at least one or two RSI readings under 70 for me to go with it. So say, for example, from here, we do rally to new highs, but we don't take out the 70 RSI. That would be a better signal to me than trying to short all this momentum. I'm not saying it doesn't work. I'm just saying it's not my discipline. And my discipline is saying there is a chance for the yen to make another move up towards these highs in the next several days. Really, the biggest day of the week, although we have ADP tomorrow, is going to be the NFP on Friday. So that's something that I'm not trading heavily. In fact, I covered up some of my NASDAQ short positions. They were options, and I don't like to hold options when there's only another 2 months left. And the technical reason was, and this is something I've been pointing to for a long time. So even if I do have an opinion, um, look at this RSI reading. There's no divergence, but the most oversold on the whole chart going back to last spring. So, due for some type of bounce. The other thing was once we did break down under the wedge line, this was a wedge line and this is a megaphone line. We really didn't follow through. And when you think about it, I've been negative for an 8% move to the downside, which in itself is a great swing, great trade. So, I mean, if you've been following me with some of my bearish calls in NASDAQ in particular and NASDAQ stocks, even more specifically, talked about Apple up here at 158. I would be booking this stuff now and taking it in at least half of it and see if we could get some type of rally. S&Ps are going to be much stronger than NASDAQ. I'll show you why in a minute. But here's Microsoft, pretty big break from, 305 to 280. I'd be covering that up. We have an interesting formation happening here in Netflix. Looks like we're into the second drive here. Amazon back at major support right here. This was after their earnings report, and then we couldn't fill the gap, and here we are back at support. So I'm not saying we can't break down. If we break down from here, we're headed to 2,700 or so, probably these lows. But at this point of time, I've turned a little bit more neutral and wanted to share that with you. Tesla's kind of still grinding higher. Doesn't give you that big blowout day. And I talked about Facebook up here before 60 minutes. So if you want to know what 60 minutes is going to be talking about a month later, after us here at TradeGate Hub are talking about it, then you need to come in and hang out with us at www.tradegatehub.com. How you doing, DP and Eifer and Brooke Keep? Is that you, Brooke, from Face? Following over here. So we invite everyone to come and join our community. You guys, yeah, okay. You guys can always post charts and ask me a question. Perhaps you're considering a position and you'd like either myself or Michael to be a sounding board in the different markets that we trade. We're open to, helping, teaching. We don't pull the trigger for anyone. That's your job. But feel free to drop in and talk to us about it. And then Google had not a bad day yesterday, kind of left a nice little wick here. So I guess the major news here is I've turned neutral. I haven't gotten long. I want to see what the character of the rallies are. It could also collapse, we could have a default and, Congress won't get their act together and, we could have a major financial accident, self-inflicted wounds if that happens. I do want to cover Canada. Canada still trying to break down. We were talking about this little head and shoulders formation. It's been playing on both sides of it. I still think there's lower numbers coming in Canada down to at least take out this 25 level. And I can still make a case for all the way down to 23 or even 22. in the coming days and months, which really, argues for a weaker dollar and much stronger crude. And here we are, crude making new highs again, confirming the high on multiple time frames, not on the 4, but over 80 on the 2, and even the 15-minute, we're still over 80. But I do think we're getting close to some type of short-term high. I mean, energy has been fully embraced and has been reinforced by the news of energy shortages and coal, the price of coal doubling. And, a year ago, you couldn't find an energy bull, and everyone's embraced it now. So maybe you have to be a little bit more careful. I just want to show you the difference between the S&Ps and how much stronger they are in market structure. Is that yesterday they did not make a new low, while NASDAQ did post a new low and broke down. So this is the way I would approach the markets now, because I think that the NASDAQ has definitely shown us that tech is now in an underperforming state. So if I'm bullish looking for market rallies, I would buy S&Ps or stocks within the S&Ps, and I actually would buy the Russell over NASDAQ, NASDAQ being the weak sister in the complex. So S&Ps, Russell, and NASDAQ would be the one that after there were rallies in equities, if there was one, say, for example, we rally back to 14.9, that might be an area. If I think we're going to have a sell-off in stock indexes, I'd rather sell the NASDAQ at 14.9 than sell S&Ps at 43.76. Okay, because we could go to the 50-day moving here. This is a 4-hour chart on the NASDAQ, and go to the 200 on S&P. So looking on the upside, outperformance in S&P, on the downside, underperformance in the NASDAQ. Everyone with me on that? Okay. VIX also trapped at resistance, turned back again. I think eventually we're going higher, but I'm not afraid to say I don't know. You don't have to know what every market's going to do. I do this rundown for people, but do you think I'm in 10, 12, 20 different markets at a time? I'm not. And in fact, I think that's a mistake that a lot of traders make, that they're spread out too thin unless you really have the tools to be a portfolio type trader like a Michael Venezia that could have, 50, 100 different positions on. And, I know some people with hedge funds that can do that. Know thyself. I can't do that. I'm in the most of 3 different trades at a time, different markets. Over that, my focus begins to diminish. And let me give you an example. I mean, I know traders from the CME when I was there that never left one trading pit. Say, for example, they were a hog trader and they knew the hog market, the live hog market, like the back of their hand, or cattle, or perhaps it was in the currency pit, currency futures, or pork bellies. So they knew that one market, and they didn't have to travel from one trading pit to another, and did quite well just knowing one market. Being a master of one instrument is better than, being a jack of all trades, to use a pun. It only takes one. So if you find your concentration starting, I guess that's why they call me coach, your concentration starting to wane by looking at too many things, narrow your focus. In fact, I heard the expression that if you can't tell me the last trade the last on any instrument that you trade or where it closed yesterday, you're trading too much. That you should know that. If you can't remember where the market closed yesterday, that you're in too many markets. So keep that in mind. Want to just keep moving down the line here. Crypto's been heading up. Looks like Bitcoin wants to give a shot for the highs here. So I can't short it here. I can't buy it here. But I've seen counts that could take it back up towards 59 before we get a better correction. And Ethereum doesn't look quite as strong as Bitcoin. Bitcoin seems to have more relative strength. You could tell just by looking at the candle surging to new highs here while we've been sideways in Ethereum. So the preferred long at this point would be Bitcoin. I want to take a look at a few other things to wrap this up. Want to show what's happening in here's an ETF that I'm going to be interested in when I go ahead and after the yen has peaked. I like the junior miners. It's an ETF in the silver junior miners. I'll be looking at this GDX. I have a number coming in at 2780 in GDX. Just want to show you that one as well. Where are we? GDX. Where the gold? Here we are. Okay, so we came off this channel line. I've had this internal speed line drawn for a long time, and off these, and we got a tag there yesterday, and then we have a weekly 200 moving average coming in there as well. We're beneath all of the moving averages here. And again, when the yen peaks, when I think the yen has peaked and setting up one more buying opportunity, I'm going to take a stab at some gold shares here. Newmont is diverging pretty good. Look at the daily divergence. See that? We're making new lows. We're on the verge of making new lows here in the 4 hour. And look at the glaring divergence here. Here's the 2 hour. Still pretty glaring divergence. So gold's not going to make a new low. I'd prefer that gold was making a new low and the miners weren't, but I think there is going to be a bounce in the miners here. And I've seen some counts that could even take gold up towards the old highs by year end. So, you talk about $250 that we could end up breaking out here over this triangle, which comes in. Look at this triangle, is going to be big at this 1850 level. So I know we're $100 away, but over 1850, you're going to take out 1900 and most likely challenge this high. So I'm getting pretty constructive on here. And it might even happen with the dollar going up. So don't get confused. They could both go in the same direction at times. So I think this is going to turn out to be a pretty big trade, and I'm anticipating an upside breakout in the gold, expecting a move back up towards the top of the range in silver as well. Thought we might get down to 19. That's off the table for me now because of what we did last week in both the silver and gold, and the action right here is pretty constructive. The only thing that bothers me is the RSI reading here, which did not happen in gold. See that? When we were making new lows at 1720, gold was showing the relative strength by the RSI, not making new lows. So maybe this is going to be the setup for we get a strong number, rates head up, either on the ADP or the NFP. Metals sell off, yen heads back up towards that 112 level, and fade it. So it's either going to happen. My best guess is, and I don't want to have any big positions on in front of the NFP. I'd rather react to the reaction, but I wanted to give you guys a look ahead because you guys haven't heard me talk constructively about the metals for a while, but looking to position myself. I've been waiting for 112 in the yen as an upside objective for a while. We got there, but I'm trying to finesse an entry that may happen on a retest of the highs that we had last week or a failing rally. I'll take either. And also wanted to let you know that I got neutral on the market. I didn't flip in reverse, but uh, pulled in my bear claws for a while, and hope that these broadcasts are adding value to what you're trying to accomplish as a trader. Our mission at TradeGate Hub is to build up and edify traders every day. If you like what you're seeing, you could give us a thumbs up and subscribe, and feel free to comment. But most of all, register at TradeGateHub.com and come and share your work with us. And perhaps you'll learn a few methodologies that you could use the rest of your trading career. And at this point of time, we're keeping it open. It's free during this phase of building our community. So come be a pioneer with Coach. And I there's one, I can't guarantee profits, but I can guarantee this. I'm willing to teach you everything I know and bring in experts to for you to consider different ways of skinning the cat. So that's a wrap. And I want to remind everyone not just to be totally money focused and count your pips, but count your blessings. If you have funds that you could speculate with, you're in pretty good shape. Be grateful that you can do that. There are a lot of people that have to make choices between should I buy food or should I buy medicine, while we're, risking 50, 80 pips to try and make a couple hundred. So always appreciate what you have. Someone once told me the key to happiness is uh, wanting what you have instead of having what you want. And with that being said, guys, have a great trading day. I'm going to be back here with Mike tomorrow. Tomorrow we're going to try and do a little dynamic duo broadcast. Mike kind of gave me a hint today of what he's thinking the markets are going to do when he said you can't even fade oil. So looking forward to a little market talk, market chatter with Michael Venezia tomorrow. Adios, everyone, and good hunting the rest of the day.